and for a lot of people, but never for lenders and realtors, right?
Yeah, no kidding. Yeah. It's not a bad job. You just got to be on call. That's all.
That's right. Just
So,
like a doctor, you know.
yeah, I don't know if we're that important.
And Jackie's
No.
here with us. Happy Friday, Jackie. So, as you can see, I'm still at my remote location at the Rick Helps Real Estate Travel Trailer, and I'm trying to hook a few things up, and it doesn't work as smoothly as I thought. So right before the show, I'm trying to get my other monitor work, and it keeps flipping and going out, flipping and going out. And so anyway, I fixed it. Hello, Danila Ice, and Jackie, salute to all those who served and we lost. Absolutely. Well,
Yep.
I thought I saw an interesting article on the Crawford Report today, and it, because we're getting a lot of chatter out there that there's too much construction going on, and that inventory is going to explode, and we're going to have all these fire sales with new construction. And I shouldn't say there's a lot, that I've seen a few, and so I wanted to kind of touch on that, especially since I saw it come up this morning. And take a look at this. This is permits. So single family permits year to date. And last year we were at 12,778, and today we're at 6,550, but we're only halfway through the year. So, it certainly looks like there's fewer and fewer homes coming out there. But she does make the comment here that said, we know low supply remains a big problem for greater Phoenix housing area. The most obvious source of improved supply would be construction of new homes. If you're focusing on single family homes, the news is bad. So the permits are down here at 6,550. And I think I'm assuming that this is the end of April each year. So I misspoke there when I said this is half. So this is apples to apples, Pat. So last year at this time,
Okay.
we had 12,788. So our new permits are half of what they were last year. And in comparison, you can see where they are. And my red pen has decided it's not going to work. It's doing that just for today's show. So we won't use it. So you can see there, if you follow a little mouse, we're way below these other levels. Now, I moved back here in 96, and building was going like crazy then, I thought, but the population wasn't anywhere near what we have now. But you're sitting there at 10,712. But then here comes the buildup right here. 2006, 2005, 2006, 2007. These are permits.
Mm-hmm.
So they were building way too many homes from them. People came out here, and then boom, they had to quit building for a long time. We quit issuing permits and building for 10 years.
Mm-hmm.
So what does it all mean? And she does have a comment here that says, let's see. I think she finishes it up down here. Those who predict more drops in sales prices will have to explain where a vast new supply is going to come from. Prices only drop when there's a glut of homes coming to the market and not enough buyers. In the current circumstances, this is looking very unlikely. So I went and I looked, and I said, well, what are listings under contract doing? So they're going down both seasonally and pressure with higher rates. So those are going down, showing here 9,771 listings under contract for that latest week. And then active listings by city, you can see, we'll take a look at Gilbert. Gilbert had a little bit of a change in their CMI this week, but their listings still going down. Every city looks the same. So then I looked at closed listings, and this one I find interesting. Look at the sales per month here, 7,517. These, of course, are holidays. That's just January.
Mm-hmm.
Well, is that normal or not? So I went and looked at extremes. So where are we today? We're at 7,516. When I look at our extremes on the market here, and I realize this is probably going to be hard to see for people, but I'll just say where it's at. Sales per month typical is 7,165. So our sales per month right now seem to be typical, although it is vastly lower than the past 2 years. I kind of have to put that in perspective.
It feels lower. I mean, it just feels like, things are not the same way.
Yeah, and they aren't because it was so frantic. So we got a hello here from Nicole. Greetings. And then we have, come on, Rick, tell us where 25,000's home on the market. It's time to buy. I wish I could, Tim. The low that we had on sales per month is 2,517. The highest and that was in, guess which year? 2008. And the high was
That was the lowest? 2008?
Yeah, 2008, 2,517. And the highest we've had was 11,708 in 2019. So as we were coming into the pandemic, we hit our highest number of sales per month before the pandemic.
Interesting.
So the prices went up because of the pandemic, but because then we started having a shortage. However, the sales per month were higher prior to that.
Can you go back to that one, the new permit thing, that chart?
Yeah.
Yeah. I mean, just look at the years prior, 2007. Then, like I said, that really is what. Look at from 2010 to 2020. I mean, just if you look at the numbers, it was way below the averages.
Yeah, there's not a lot going on right here. And what's interesting is, right here, when the permits were coming out, so the permits are about 18 months lead time, right? So they're getting these permits here in 2004 and 5, and those homes were being built in 6 and 7. And there were a lot of permits that came out in 2007, 11,000 before the wheels fell off the wagon in 2008. So you had all these permits here, houses were built, buyers vanished. Also, what was interesting during that time is when they would build these developments, Pat, and then before the homes were even sold, the shopping centers showed up, the Walmarts, the Targets, the grocery stores. And I saw so many of those that, especially in Las Vegas, where the development would come in and there was nobody shopping there. I remember we went into a Target and I was with my vice president once. We were going in to check out the store. And I said, look around the parking lot. There's like the only cars that are parked in this parking lot are employees. And we get in the store and there's nothing going on in there. So they were just as optimistic as the builders, which is why I bring that up. So everybody gets caught in that, well, people are going to move here. We got to put the services in place. And they did not show up. But now.
Goodbye, Target.
What's that? Yeah, I had to use Target. So those guys talk about shooting themselves in the foot. I mean, it just, and Bud Light.
Don't get political. Don't get political.
Yeah. It's funny. And funny. So here we go. So before I ask you to explain what's going on with rates, I saw on Mortgage News Daily, Pat, and I wanted to see what you thought of this. The headline of this article is, do rates care about the debt ceiling? And it says that leaves us with what is mostly an exercise in political theater and their brinkmanship on both sides of the aisles. No value judgments in this newsletter ever. Despite that, some traders take logical defensive measures just in case this happens to be the time where we finally see a default, even if it's very temporary or heavily qualified. In other words, if they take any actions at all, like, oh, we're going to delay this payment. Those defensive measures cause volatility in certain corners of the bond market that end up spilling over to other parts of the market. Additionally, the broader topic of the debt ceiling is generally negative for risk assets like stocks and positive for longer-term bonds. Conversely, when a deal is announced, bonds could take a hit, thus pushing rates even higher. A debt ceiling would reinstate the U.S. government's ability to borrow via the issuance of treasuries and Treasury issuances correlates directly with interest rate levels. More issuance equals higher rates, all of the things being equal. Here's the kicker. If you understand all of that, not you, the audience, all of this happening at a time when rates are already under pressure to move higher. Mortgage rates, for instance, shot back over 7% this week for the first time since early March. So they're kind of saying, well, rates probably would have went up anyway, even without this debt ceiling talk.
Yeah, I mean, yeah, it's just there's obviously a lot of cross currents going on in the market with the debt ceiling. You get the inflation. I mean, today basically the PCE, the personal consumption expenditure number came out, and it showed inflation was up about 0.4% in April, which was a little bit hotter than 0.3 that they expected. So, and said the year-over-year index increased from 4.2 to 4.4, which was higher than expected. So we saw, I mean, right now though, I mean, today we saw the pretty benign market. I mean, it was down 5 basis points on the 5.5% coupon. Yeah, I mean, the last 2 weeks has been not obviously good with rates. I mean, I think short term, this is, if you look at it, I mean, obviously right here, I think I said earlier this week that this was going to be a sloppy week, with the Memorial Day. Traders, once again, they want to clear out. I think even Mortgage News Daily said, traders want to clear out their positions for the weekend. They don't want to be holding anything. So that's why I think you're seeing, right in here, some, sloppiness. And now we saw it in the market closed early today. So, I mean, we're at a point, the bond market, bonds are oversold here. I mean, we've got this stochastic chart right here where it's off, it's going below. So bonds are certainly oversold here. I was expecting a bounce probably right in here, but obviously we got slapped, last couple of days. But I think we're going to see some rebound here. I mean, there's just a lot of news out there that obviously we can't control. I think this debt ceiling stuff is obviously, like they say, theater. It's going to go back, and the Treasury just going to go back to what they're doing. I mean, like you said, Barry had said that basically, we didn't see any progress on the inflation, but he does anticipate some nice progress over the next 2 months. And once we start comparing year over year, numbers, and because obviously back in May and June, he said there were 0.6 and 1% respectively, which means he said if we see 0.4% readings, we would see a year over year inflation drop from 4.4 to 3.6%. So, I mean, he said the pressure was obviously in gas, energy, but he says things will catch up, and he goes, just hanging in there. It's obviously right now, didn't quite expect this. This has just been stupid weakness, but I think we're going to see a bounce next week. But it's just a sloshy market, and I think anybody that's looking at locking. I mean, obviously rates have been particularly high the last couple months anyway, and I think whether it's mid sixes, high sixes. I mean, I think overall the theme is going to be that. I think there's going to be light at, I'm just following with what Barry is saying. And I think there will be light at the end of the tunnel here going out the next couple months. So people, next 3 to 6 months are going to be in a position to, eventually refinance, so whether it's 6.5, 6.75, 6 7/8, I know people want to I think it's just going to be a temporary rate that they have the next 12 months.
Yeah, that's a good time to remind everybody too that we are going to be interviewing Barry Habib. We are going to actually record that on June 19th. I may have it up that evening. If not, I'll have it up June 20th for sure. But it's going to be interesting to hear his take on inflation. I also heard today that on the radio, 3 Fed chairmen actually came out and finally shot one across the bow of Congress and said, look, you guys are going to have to rein in spending because we can only do so much on our end.
Yeah.
So they're
Yeah.
finally saying, look, if you want the central bank to be the sole proprietor of solving the inflation number, then they're going to have to keep going 100 basis points up and absolutely slaughter the economy while the Treasury's writing checks like a drunken sailor. So they finally came out
Good.
took a few shots across the bow, especially during this debt negotiation. And you guys got to pull it in. We've gone
Yeah.
from 17% of GDP on spending to 20%. And our national debt right now is 129% of GDP. And our spending is at wartime levels. So it's time to pull it back.
It's
And,
ridiculous. It's asinine.
if they don't, I mean, you're not going to care what your mortgage rate is because everything else is just going to come crashing down. But it's out of control, and I'm glad to see the feds finally slapped them across the head a little bit.
Well, and the other things too, I saw this one financial, this pretty well respected on Fox Business News today that said, he goes, he reiterated what Barry's been kind of saying about the Fed. He goes, yeah, and I can't remember the guy's name, but he's pretty well, pretty well versed. He goes, and he basically, his theme was the Feds are behind the eight ball. He goes, they keep cranking up rates. He goes, the money contraction is falling at about 5%. And he goes, he referenced about two. He said, what it's been happening only happened twice. So like the Depression and about 100 years ago, whatever's been happening with the money supply. I'm just summarizing it in simple terms.
Yeah.
But he said the Feds are so behind the eight ball. He goes, they're raising rates. He goes, you're going to see them. He goes, we're going to be in a deflationary period here coming up in a short period of time. I mean, everybody's got an opinion. You got tens of thousands of people out there, financial advisors, well-respected advisors that, they kind of have a chance, they know what they're talking about, but obviously they're still kind of, they're looking at the tea leaves. But this guy, he said the money contraction's happening. He said, we're going to see inflation has been still running high, but we're going to start to see disinflation here, not in the near future.
Yeah, I'm looking at M2 here, and it's way above my pay grade, but this is where they're talking about here, and I got my red pen working, so insert the applause here. So, but this is where you can see it's going down, but really, look where it was. This is the amount of money that's in circulation.
Yeah.
Look where it used to be. So are we seriously trying to get from here up on the top here down? I don't think the economy can handle that.
No.
So it's but they are really contracting on a percentage basis.
Well, I think, if you think about, I'm going to pose this to you. I mean, yeah, there's talk about rates going higher, but, look at one or two scenarios, rates going lower. What's going to be better? Rates going lower, at least subsiding and maybe getting into the overall, just the mortgage rates, maybe getting into the mid fives, low to mid fives versus them exploding up to say 9 or, just some stupid number.
Or maybe just hanging where they're at right now, because we're already seeing that sales are called typical, where that number that's kind of been our typical range. So
yeah,
maybe if we hang in there all summer, maybe early fall at that typical range, and building gets a chance to catch up a little bit, rates come down maybe a point, and then things can take off without raising the cost of real estate in a perfect world. But nothing's going smoothly. You could bounce the scenarios all over the place. All I know is between now and probably the 1st of July, I expect us to stay kind of right where we're at right now in rates. I don't know now. I mean, I've already lost my dollar betting you. Life in Phoenix's banking system, blockchain, etc. Charlie, people are going to have a shocker coming when this change over happens. Shakeout will be interesting. She's replying to Charlie saying, what's the shakeout? What's that mean? Debt ceiling, it's a mess. There comes to a point where this can't keep going. The debt ceiling, you've probably heard me say on this show, and I said it Thursday night. I said it when I was being interviewed by Dan Friel. What is a debt ceiling?
Yeah.
And we all promise with a little pinky swear that we're not going to spend more than, 4 trillion. I mean, there's nothing to it. So they put this ceiling up saying, if we get close to that ceiling, we're going to quit spending.
Well, they're not even, based on what I've heard, they're just asking for the same, for 2022 numbers, nothing crazy.
And 2022 numbers were um, way too high.
Yeah.
So I don't know. I'm not too jazzed about it. Now our tax revenue is is at record levels too. In other words, we're pulling in a lot of money. But another
Yeah.
interesting thing that's going on, you know, that development down by Tempe Town Lake, where you've got Carvana and you've
Yeah.
got State Farm and you've got Open Door. Well, Carvana puts chunk of their prominent Tempe Town Lake office up for sublease.
Interesting.
That big old building right there.
Yep.
Going to sub it out, and Open Door is planning on doing the same thing. So those big developments down there, and there's another big development that's coming as well for that.
I think Silicon Valley Bank is down there too, aren't they?
I don't know,
I think.
but it there's a huge new development coming down there, and I had it on here, but I can't. Oh, here it is. Developer secures loan for multi-billion-dollar Tempe Town Lake project. And
So they get built.
It says if we get political, it'll increase views. Yeah, it may not.
Oh, we know that.
Yeah, no, we're gonna. We might not, Tim. I'll lose 50% of my audience. But when it comes to spending and math, I don't care what party's doing it. I'm gonna handle it. So I don't care if the Republicans.
I don't care about politics. I care about policy.
Yeah, policy. But look at this. South Pier, Tempe Town Lake. They're going to build all this stuff. They're planning on putting a Ferris wheel down there.
Oh, Jesus.
Right next to the bridge. I mean, it's hard enough getting around down there, for crying out loud.
No kidding.
I mean,
don't they look at density as far as, I mean, my God, they got one road going in, one road going out.
Yeah. And there's nothing more fun and relaxing than riding a Ferris wheel when a 747 is going over your head. You're right in the path of the airport.
Or riding a Ferris wheel when it's 120 degrees out.
Yeah.
You're getting stuck at the top.
Yeah, you're waiting, because they always unload you like one chair at a time, and you're up there going, oh.
Yeah.
I had a client call once from Zillow, and they wanted to see this condo, and they were from Southern California, and she told me where it was. And I said, okay. I said, well, before we go there, I said, are you aware of the proximity to the airport? She goes, I live in Long Beach now. It can't possibly be that loud. First thing she says when she gets there is, oh my God, that airport's loud.
Yeah.
I mean, the planes were going right over your head, and then the building would shake. And I go, yeah, I think I mentioned that.
Yeah.
So, it's gonna be interesting. So we've got people making laughing at Tim here now. So Tim, you are famous. We're gonna see what happens to you. And then Terry jumps in and says, warning, realtors will be jumping off the Ferris wheel.
Yeah.
Hey, you know what, Terry? I mean, we're sitting here at what we call normal levels that we just looked at. And the problem is we ramped up with a lot of realtors over the past 2 years to handle the high volume. And now the volume is sitting here at sales per month at a normal of 7,100. And
it does feel slower though.
It does feel slower. It's 49% slower than last year. And Charlie says it's not as me. No, I'm not going to jump off a Ferris wheel. So I'm enjoying my little soiree up here in the Pacific Northwest. I went down and walked the beach this morning, and it's 65 degrees. My brother went.
I don't really need to know how. I really don't want to know how good your life is right now. Let's keep moving forward.
Oh, okay. Yeah, I'm getting a cramp right here. So
yeah,
I get to eat some fresh shrimp tonight.
Yeah. All right, yeah, whatever.
On that, so.
Whatever.
I had halibut for lunch yesterday. You want me to go on?
Yeah, shut up. But,
well, get on a plane. I'll show you around.
Yeah, exactly.
So we're on the Pacific
Northwest. I think I'm in
Squim. Sorry.
Oh, cool. No, I think rates are going to. I mean, they've just been on this slide down the last week and a half. I mean, I think they'll recover here next week. I mean, they're definitely oversold. Next week we got the BLS jobs report on Friday, so I mean, bonds are definitely been trying to get some reversal here. I think, but even like Barry said, things are set up for a reversal when looking at the momentum indicators. So, he said bonds are deeply oversold right now the last couple of days. So, I mean,
What date is the next Fed meeting? Do you know?
June. I had the date. It's I have to get the date. I don't have the date in front of me. I did. I can't remember, but it's in June. So
It'll be fun if it's right before we meet with Barry. So
yeah, definitely. Oh yeah, hey, and also once you put out there, ask anybody who's got start taking questions that we can submit to them.
yeah,
Right?
send questions to rick@rickhelps.com. Anything you want us to ask Barry, except for what he eats for lunch. But what kind of questions do you have about the bond market and interest rates? And does he think that rates are going to go down for the long term? Does he think there's potential for him to go higher? Anything? And we would like to we'd like to ask him your questions. We'd like to send them to him ahead of time. Jackie's thinking the meeting is June 14th, and she's double checking for us.
I think it is. Yeah, June 4th, 13th or 14th. So
yeah.
But yeah, if people can send in their questions, we're going to pick 3 to 5 that are hopefully somewhat in depth. Nothing crazy like I don't know. I mean,
well, if it's crazy, we won't ask him.
yeah, but so sounds good.
Yes, Jackie said yes. It is the 14th. That's perfect. So we'll be talking to him 5 days after that. So that'll soiree quite nice. That'll be a nice. What do they call it? A segue. So
yeah, segue. Yep, exactly.
So you don't expect much to go on next week because there really isn't any data coming out that's going to shake things up, correct?
Not really. I mean, there's there's Thursday's the ADP employment report from the month prior, and then the BLS jobs report on Friday. So I mean, Monday, people are still probably on holidays, mode now. Next week it's going to ramp up slowly, but like you said, Barry thinks that they're in definitely a deeply oversold position right now, but we'll get there. So
sounds good. Well, Pat, have a fantastic weekend. I'll ask ahead. Do you want me to send you more pictures of the shrimp, or are we pretty much done? I
think you can just shut the whole thing down right now. Okay, yeah. All right, buddy.
All right. Thanks a bunch. Have a super weekend. Take care.
You too, buddy. Take care.